Hey, good morning, everybody. This is Dennis Wilborn with the Active Trend Traders. Welcome to the How to Make Money Trading Stocks webinar for today. Uh, Crazy week in the market this week for certain. Mike may join us later. Michael is they came off of daylight savings times over in Switzerland, where he lives, this week, and so he's having dinner. I've asked him to make sure he joins us next week. I would like to get a European perspective on what's going on with, after the elections are all settled out. So exciting times over the next few days. Remember, all materials that we present are for training purposes only. Traders should always paper trade any new method prior to the risk of their own personal capital. And if Michael was with us, this is what he would be presenting. His disclaimer. But let's get right into it. Hey, one of the things with Active Trend Trader, and thanks for all the emails that have been coming in about the training that's been being provided over the last, 3 months. I'm not tooting my own horn, but I think that it has really been a really great consolidation of training into just a really sound mechanism where everybody can take the Active Trend Trading System and trade it going forward. One of the things that we talked a little bit about on this past Wednesday night, we were talking about the power of compounding and also the aspect of how to use margin/leverage. This week we're going to, and we had mentioned the concept of modifying our strategy number one to incorporate trading more of the ETFs. One of the things we've been trading Nugget now for several months now. It's been doing really well, and that's one of the things that just triggered me and said, wow, these things put in really great patterns and they get really nice runs, 15, 20, 30% runs in a very short period of time. And so if our timing's right on those things, we can do quite well, and we've been doing really well with the Nugget trades. So we're going to expand that. Mike and I are working right now on the mechanism for making that work. We'll probably launch that out for everybody who's listening to premium members of Active Trend Trading. We will launch that out in the December timeframe. Try to be right in time for when at the beginning of December, so that we can sit there and be ready for the Fed's meeting in December. So next week we're going to be talking about trading ETFs only. There are certain benefits to doing that. Mike and I are looking at putting an additional focus on leverage ETFs as another means of simplifying what we're doing for the folks, because our heart still goes, to the folks that are out there still working for a living, but still wanting to be involved with the market. So if that sounds like something, if you're not a premium member yet, drop me an email and I'll be glad to send you a link that will allow you to join at a 40% discount off the standard premium memberships. So what's going on in the market this week? Well, we sold off to a lower level of support. We know that. Mike and I were talking on Wednesday, and we chatted a little bit about this. It appears as if the market actually may be setting itself up so that regardless who wins the election on Tuesday, it provides us a nice post-election bounce. When you look into the, those of you guys who trade, those of you who trade options, take a look at anything that has next week's options, weekly options, and the implied volatility is going through the roof on the next week's options, and it's really kind of interesting. There's a lot of Yeah, David says the premiums are juice beyond belief, and yeah, and part of that has to do with the increase in volatility. It was up over 20. Let's go back here. So S&P downtrend, but looking for support. May have found support at the 100-day moving average, 200-day moving average. NASDAQ 100 at support? Question mark. And the market was searching for, Russell was searching for support. It was down from the highs of the years, almost 8.5% earlier in the intraday aspect. And so the outside influences on the market this week are going to be, one, the election, of course. And what was really kind of humorous last night, I was reading a report, and some of folks who are involved with the market, especially the fund managers and all that kind of stuff, they're all, we're always looking for reasons why the market's doing what the market's doing. And so the thing that they singled out last night is that WikiLeaks and all the stuff that's been coming out on WikiLeaks is partly a corporate, not a corporate, but a culprit on the market falling off. So you can take that with a grain of salt, but I thought it was an interesting link in because the WikiLeaks things have been really interesting here of late. It's part of the thing of just, I don't know if you've ever read the Black Swan, the book about events that, like everybody's saying that if Trump is elected, that will be a Black Swan event. Totally unexpected, but that really doesn't fit the definition of a black swan, because a black swan, you can't see it happening. It just happens. And everybody goes in and searches for reasons why the black swan happens, so we can be better prepared for a black swan in the future. But the fact of the matter is no one is ever ready for black swans. So elections, WikiLeaks, really, yeah, uncertainty with the election, that is certainly palatable. And it's going to be, let's just say Tuesday is going to be a very interesting day and may last more than one day. So here's a percentage of stocks above the 20-day moving average. As of last week, we were bouncing down here around the 30% level. We saw a slip in that earlier this week. We fell down below it on Tuesday, remained below that level, sent out a standby alert on Wednesday for the early warning alert system, and unfortunately got banged out of our positions that we jumped in yesterday morning. Appears that we may be finding support, so if you are an early warning alert person, stand by for that secondary alert. We wanted to keep our stops exceptionally tight in this particular case because in reality the early warning alert is designed to, you stay in the trade for at least 15 to 21 days. And so what we're searching for right now is that secondary entry point, and it may not happen until after the election. So just, stand by in there. We kept our losses exceptionally small yesterday, and so that's what we're looking for. As we see, and we'll talk about this when we get to the S&P chart, but as we can see here, the bar chart aspect of this is the spider as a substitute for the S&P. As we can see, it has been in a downtrend since, going into September. We came down, made a new low, came up, made a lower high, came down, made a newer low, lower high, and then finally we get some capitulation down to the downside. Would like to see, in reality, this has been one of the best constructive periods on the percentage of stock below the 20-day moving average, but oftentimes the even more constructive periods is when we get down here in this area here But we're watching this very closely to see what's going to transpire moving forward. The thought behind what's going on with the market right now is a couple of things. One is, yes, we may get that post-election bounce. You got a post-election bounce. Don't know how far that's going to take us. We know we'll have, resistance up here at the trend line and also the moving averages. And then secondly, the Fed's strong potential of raising rates in the December timeframe, the 12th, 14th, and 15th, I think is their next meeting. And yeah, Gary, those emails did go out yesterday, so you may want to check your spam folder. One of them was sent out, I think, late last night when it was clear that TNA got stopped out, or it may have gone out first thing this morning. So that's where we're at with the indexes. What about, okay, as you can see, every one of the indexes as of about 9 o'clock this morning is down from its high of last year. However, all of them are still positive for the year, but they are sliding. Not unusual for an election year. Election year is typically very fluid and bounces around a lot, and oftentimes it has a slight bias to the downside. And we may be seeing this. If we do not get a, it'll be interesting to see where we finish the year at. Is it going to be a negative year or a positive year? And usually the election year is historically turns out to be kind of neutral to a slight downside bias. So as you can see, there's been a lot of great trading opportunities within the indexes throughout the year, throughout 2016 for some nice upside moves, but it's all been contained within a very constricted range. So let's take a look at some charts and see what we may see what's going on. Okay, here's the S&P. The S&P, as we're talking about, it has this, here's the fib that goes from this swing low to this swing high, and as you can see, we've come right back down to, and this is something to take away, early warning, guys, because Mike and I put out what we're trading, and but everybody's responsible for their own trades. One of the things that I was chatting with Mike about last night, what may have been yesterday, what may have been a better option was, since with this 1, 2, 3, 6 fib line got busted, waiting for it to pull all the way back down. As you can see, it pulled right down to the 200-day moving average, which coincides with the 1618 extension, and today is getting a nice little bounce. Does it mean we're going to, we still have not taken out the high of yesterday, but certainly a good bounce this morning. What was the aspect of the market this morning? Well, one, we get a gap down open and then a move up. What was the aspect of yesterday's? And this is one thing you can kind of watch on a, when things are turning bearish and more prone to sell off. Well, yesterday we get a little bit of a gap up open and then a sell-off, and that's very a personality trait of a weak market. However, today, gap down and then a move back up. For those who are, who can sit and watch what's going on with the market or are experienced in doing conditional orders, on a situation like this where you get a gap down, if you take out this lower resistance area here where it closed yesterday, that oftentimes is a great place to plan a potential trade. You target shoot that. If it opens lower, moves back up, you want into the position. So on a longer term basis, on the let's see, I'll shorten this out a little bit. I'll try to shorten this out a little bit. As you can see, on a weekly basis, This has been a very negative week for the index, the S&P. The TSI still pointing down dramatically. Is it going to get back down to these other levels? You know, it possibly could. That may take place next week, but we'll see here. We've got a really strong level of support now at the 2082 level, and it also corresponds with a fib. And we'll see, you know, whether or not that does in fact hold. We've gotten cross signals, and when I say cross signals, what I'm talking about is on the True Strength Index on the daily chart, we're getting what appears to be is going to be a reversal at the -50 level, and then the momentum is hitting past, you know, is below past lows, and so oftentimes that's an indication that, hey, a bounce is in the offing. Now it can get down a lot deeper than that, and so sometimes this is one of our, you know, kind of a pattern that we look at. You get one bounce down, bounce up a little bit, and then a fall further down where you get further oversold. And then if you can identify a level of support in those areas, then you can plan a trade up around those potential openings. So just so for right now, what I put out yesterday in the after-hour market update was that I plan on, I'm basically going to keep my powder dry moving into Tuesday. I'm hesitant on opening any new position because of just the flakiness of the market right now. But what I may be looking at, you know, after hours when we get to the secondary event, the final hour of the day broadcast for premium members, is do we nibble a little bit, or do we wait till Monday? Because you know, treat Tuesday like a big earnings day, but for the indexes themselves. And so what happens on earnings day? Implied volatility continues to move up dramatically. And so that will enrich the premiums, and then trade it after there, and, you know, see if we can get some trades going into Tuesday, at least partial trades, to take advantage of that implied volatility. Let's see here, NASDAQ. Okay, what we're getting with NASDAQ, you know, excuse me, has dropped this low here, so it too is in the process of putting in, you know, this was a slightly higher high with, you know, negative divergence going on here, clearly negative divergence going on in the weekly charts. With the tipping over of the TSI on a weekly chart and the momentum, it's an indication that we're getting acceleration to the downside. And so I would look for retracement anywhere in this candle here, you know, after next Tuesday. Any retracement up here, because it appears like the market still favors a downside break, but I'll look for anything kind of retracement in there. You know, it may bounce back up into this resistance here at the 47.57 level. And David asked a question: what if we were to sell both out of the money SPY puts and calls and close them out on Tuesday morning to capture some time decay? Yeah, David, that's, you know, that can be a good strategy. I would wait until probably Monday to do that, simply because with the thought being, or the theory being, that the implied volatility would continue to rise. And so if implied volatility is rising, it will sometimes, if it rises high enough, it will counteract or even cancel out time decay. Okay, so that's what we got for the NASDAQ. And as you can see, we've come right back up into this resistance here at about the 4,700 level, and it is stalling and slowing down at that point. I'll pop over here really quick to an intraday chart, and you can see that over on this is an hourly intraday chart. One can take and we don't usually talk about hourlies, but I like using hourlies on a either after hours basis, but that is basically the trend that needs to be reversed. It has not been reversed yet. It would be reversed once it pops back above this, but this is a way you can use these hourly charts to be able to say, okay, what's going on here? What's going on down here with the TSI on an hourly chart? Well, we got a nice reversal today. There was no positive divergence though, so it's just a quick relief rally. We'll have to, a relief rally get rid of some of the oversold condition, or is it going to be something more substantial? And that's where we have the ability to wait and see exactly what's going to transpire. As you can see, we can do the same thing over in this area. This was a breakout here, went back up above the 8, moved back 8 period moving average. The 50 period moving average on an hourly chart coincides almost very closely to the 8-day moving average. And as you can see, there was this point here, pulled back to a higher low, excuse me. But then you can also draw a line across here. And unfortunately, you get a gap up above it, then a pullback, and then it takes off once again. But you can utilize the same aspect on an hourly chart as you do on a daily chart or a weekly chart. The same rules apply. And a lot of swing traders who trade, for, a few days to a few weeks, they'll use these hourly charts to time their entries both to the upside and both to the downside. And it's looking at them after hours and then planning around where the hidden levels of support and resistance are. And so let's get rid of, don't want to get rid of all those drawings? Yes. So like I said, we don't usually go to the intraday chart, but I think that, if you don't use intraday charts, it's a great time to start at least assessing them, even the hourly chart after hours. If that's the only time you can look at them, that's great, because you can observe and say, okay, on an intraday basis, am I oversold or am I overbought? Does this make sense to get in here, or does it make sense to get in over here? And often you have to look towards the end of the day, and then you can turn around and plan. I think it improves the planning for entering trades. So that's a daily chart. So let's go to Russell really quick. Russell got a really nice turnaround this morning. Okay, at this point, Russell, this is almost a bullish engulfing type pattern, but it's not quite a bullish engulfing. But we're getting a similar type of thing. We're getting cross signals. The dailies appear as if they're ready to take off and bounce. The weeklies still appear like they may have some additional downside. The dailies can bounce up. What would be an objective bounce up on the dailies? Well, you've got your trend line going down. You've got all these moving averages. We are way extended away from the moving averages, and so if you did, if you are still hanging with that early morning alert trade from yesterday and you held on to it, then where would you target your exits? Well, you could target your exits when you get back up to the 8-day moving average, back up to this level just above it, that level at the 1194, or even the 20-day moving average, which would be about the 1200 level, which was a good strong level of support resistance from the past. I'm looking at this. We don't know where this is going to finish the day, but I'm finding it quite interesting as it's moved back up. It's bumped back into resistance and has sold off just a little bit. So something to keep your eye on. Again, what would be very nice prior to the end of the year, or even going into the first part of 2017, if we get one of these, really excellent larger sell-offs, a capitulation type sell-off, and we start getting these kind of setups here, where we're getting some positive divergence as it's moving up, or a crossover after something like a hammer on a weekly basis. But these weekly charts, when they get really oversold, they can oftentimes provide the opportunities to get in for the bigger move. So we'll be keeping our eye on that. So any questions on the market, guys? Okay. So right now, what's the path of least resistance? Moving through next Tuesday, I think, I personally think our path of least resistance is kind of like between these two, but not, I don't know what the path of least resistance is with these two. But, slightly, we may get a move back up, followed by a sideways move, or I think that, that there could be a bias to the sideways move with a slight bias to the downside. Again, it goes back to the aspect of we've got a downtrend, downtrend on both the Russell and the S&P that's already in place, and now we may be just operating within that down tilting channel over the next couple of weeks. After the election, this is an opinion only. I think that you'll have an initial tendency for an upside bounce. You may want to call it a dead cat bounce. But when the Fed comes in December, and with the potential and high probability that rates are going to be increased, I'm looking for a sell-off in the last last 2 weeks of the year, and so we may get a short-lived Santa Claus rally and a Hillary or Donald rally, but then immediately, as soon as this contest is decided, then the focus is going to be right back on the Fed. What about the employment report? Was it the employment report today? But it came in a little bit strong. The main economic report today came in a little bit stronger than expected, thus putting more pressure on the Fed to go ahead and raise rates. Okay. This week, got bit a little bit on our strategy 1 trades with our so far through the month of November, and also one of our strategy 2 trades that we had set up. I basically the 2 trades on the strategy 2, which is straight option trades, was primarily totally we did not get a pre-earnings run in either Google or BABA that we expected, and those positions have been closed out. Strategy 3, fortunately, we just closed out the position in Tesla for a profit, and so the cumulative of that gave us a small profit for the week. And so compared to, of course, to the indexes, I'm quite happy. This is the kind of hit. I think this week is very, basically gives you a really good explanation of trading. While we would like to have a great profit every week, it points to the reality that trading is a lot like having a commission sales job. And anybody who's worked commissions know that some weeks and even some months, commission doesn't pay well. You have a down month, and then but then that's replaced with a month where you have a really nice upside month. And so it's not one of those constant, steady. Here I get $500 a week, and I draw my paycheck and all that kind of stuff. There's fluctuations in that, and when I started trading for a living, once I helped my wife understand, because she was coming in every week and says, well, did you make your $500 a week? Did you make your $1,000 a week? And I go, sweetie, it doesn't work that way. But once she understood that it was more like a commission job, commission type job, then she became a lot less of a hand wringer about what I was doing. Not that any of you who have spouses that are hand wringers. So that's where we're sitting at as of Friday. As you can see on the equity curve, to date for November, yeah, we took a little bit of a hit on that, but the end of the month is still, and so we'll have some makeup move that we'll have to move back up. And so that's one nice thing about having 4 more weeks of the month of November to trade. We're still up nicely for the year in all the strategies. So here's one I wanted to highlight. This is the Tesla trade we did through the month of October, moving into the month of November. And this is one of our strategy 3 process, excuse me, for Tesla. We've been trading this now for a couple of years. We already closed out the first part of this position because it, one, paid for the underlying leaps and then provided with the residual value of the leaps plus what we had taken in on premium on a weekly basis. We had paid for the position plus made an additional 100%. Well, we're pushing that with Tesla. Now this excuse me, these Tesla leaps that we sell against will expire in January. So we'll look at rolling those forward. Excuse me just a second. There we go. And so, but then at midway through the year, we entered and opened a new position on those. And our cost basis was, and we only did one contract on both sides. Our cost basis was $58.90 for the contracts, which equates to $5,890. We have thus far, since we opened this on June 6th of this year, we have paid for our underlying position, and so we're up with that. And so we have 11 weeks to go, and if we keep churning this out, our target is to get up to a position where we have not only paid for our position but also had an additional gain plus the residual value of the open leaps that will equal 100%. So we're pushing towards that. And we'll continue to push along that line. The win-loss ratio on this particular strategy is about 0.75. Average income on a weekly basis is about 307, or approximately $12.58 per month. There's some weeks, just like anything else, some weeks we do hit losers, but we limit our losers by 1.5 times the amount of premium that we need to make the 100%. So we're pushing forward with that. Right now we've got positions open in the SPY, Nugget, and Tesla. So future presentations and events. Tomorrow, if you are in the Bay Area, the Bay Area Moneymakers are hosting Mr. Lee Tanner, who is just an absolutely excellent IBD type trader. Lee has been doing this for a long time. He is a future he is a, excuse me, he is a former naval officer, not electrical engineer, but a nuclear engineer, and he really pulls together a very detailed presentation about how to find IBD stocks, and then also how, he's going to present on how well his portfolio is done for the year. So if you're around San Jose, you want to stop in. It's San Jose Masonic Center on Masonic Drive. And then next Wednesday night, we're going to talk about trading ETFs only. We have updated some of our videos for premium members, and Mike and I are always pushing the envelope to try to improve and provide enhancements. One, we're doing more pre-market alerts the night before so that you have it first thing in the morning, no matter what time zone you're in. Final hour trade setups, that's at hourly. The hourly webinar we do immediately after this webinar for premium members, and we look at setups for potential trades on strategy 3, and then trading leverage ETFs, that is coming, and then doing a little bit more refinement on entry criteria is what we're currently working on. So a reminder, everybody, the active trend trading system is based on, one, our motto of trying to clarify, simplify so that we can all multiply, and it's based on the 5 pillars of active trend trading. One, identifying what to trade. We typically trade only top quality IBD stocks and or index ETFs. I'll have to modify that once we get the other ETF aspect launched. And that ETF aspect will not be I know a lot of people who have, who do these, this type of a membership. They would add something and then try to charge charge the membership more. I never do that. I mean, that's not the way I do business. It will be added as an extra benefit for premium members once we have it all polished up and ready to go. Pillar 2, when to enter, entry action point, when to exit, what strategy we're going to use, and what to expect. I'm a firm believer, and you hear this from me every week, that before you look at any strategies, you have to have a strong system with good, good backbone, good, as they talk about in housing, good bones. That has been proven from the past. We've done over, 10 years of back testing an active trend trading system, and we continue to provide enhancements to it so that then once that's solid, then you start adding in your strategies. We have 3 basic strategies we use. 1, stocks and indexes, is a portfolio building type of strategy. Basic options, 10% of our funds are allocated to just basic directional and spread type options. And the wealth building and income generation, which is where we utilize the leaps and we sell weekly premium to generate both that income and wealth building. So that's all I've got for today. Let me look at the time to make sure, because I got to get ready. Yeah, we got plenty of time to look at some additional stock. But folks, keep growing the egg, trade wisely, trade profitably, and don't forget to vote if you haven't already pre-voted for the election on Tuesday. I know it's going to be exceptionally, let's just say Tuesday, I think is going to be an exceptional time because we have 2 historical candidates. On one side, we have the second woman who has ever been the nominee of her party. Yeah, David, I was going to get to that. And we've never had a presidential candidate that is being investigated on 2 different issues with the FBI before the election. I find that extremely interesting. And then we have the novice on the other side who some people think, a a business person with no political experience. So let's just say we have two history-making candidates out there, and hopefully the one that's selected will make good history for the United States going forward. And remember, premium members next, the final hour. So we've got a couple of, we can look at a couple of stock charts before we go. I have my timer set to go off. This is the, little bit of a sell back off into support that we were, looking at. So I find that that interesting. I'm excited about that because I think it's going to give us a better potential to jump on a good trade before the end of the year on over the next few days on the early warning alerts. And as David says, as they say in Chicago regarding the election, vote early and vote often. So let's see, what do we got here? Eric, no, Gary, ACIA. Do you own the stock? Are you looking to get into it? Let's just do a couple of things on this, give you an idea where we're at. And this swing low here didn't stop that much until this swing high. We can go ahead and take that, or better yet, we can just go over here on the weekly chart and do the same thing while you're answering that question. Pop it in there, pop it in there. And basically what we've had it drop down below the magic fib box, 618, and typically if once you jump down below the 618, then you tend to drop more. We see that there is a strong level of support. Yeah, there's a strong level of support here at about the $60 range. I would look at it, it is in a downtrend that has had some acceleration over the last week or so. TSI is moving sideways. It's an IPO type stock, and so it has, we're just barely starting to get some of the longer term weekly aspects, but we do have momentum down below the zero line. True Strength Indicator has moved down below the zero line also. No indication on a weekly chart that it's ready to turn around yet. So look for some, I would be looking for, what I would be looking for at this point is I look for, as you see how it consolidated over here, I would look for something similar over here and then use that 60 level as a line of demarcation. If it drops below that, you could plan trades around that, but if it drops below that, then it's probably going to go on down and retest down here, perhaps at the at that level there. We can also throw another fib on there. Let's go a fib retracement, and we'll go a fib retracement from here back to here. It's past high. And as you can see, I find this very interesting. The 1236, which is a strong level of support based on fibs, is right back down at this past swing high where it broke out of and took off. We get a close below this level here, then the 100% retracement, that increases the odds that we're going to at least get back down here to the 1236. So at least it gives you targets where you can plan for your potential trades. Then let's see, EOG, Susan, EOG, and the question is, Okay, Susan, looking to sell covered calls in this position as they just had earnings. Can you review, please? Sure, Susan, I can do that. I would be wanting to, if you're looking at selling covered calls against it, I would, well, the first thing I want to know is EOG. Excellent. Are you looking at selling weekly covered calls? Because it does have weekly options, which gives you the opportunity to do that. Let's see what kind of premium that it has. Like next week, your expected move on this is between plus or minus $4 from where it's at. It looks like, so $4 up from that is 92.96. $4 up from that is $96. So you can pull in about 57 cents so between now and next week. To the downside, if you went down $4, which would put you about 88, so about 50 cents. See this increase of, next week, increase in volatility a little bit. Hasn't really driven up. EOG Resources is an oil company, right? Or an oil storage company? Okay, probably monthly. Yeah, I would, Susan, on this one, I would double check this because if you were to go out a month, let's say you go out to, here's the monthly options. And clearly you can go out and sell, go up to we looked at the 96. So the options expire 2 weeks from now. You get 99 cents to, around $1. But if you start turning around, if you have the ability and time, 4 weeks worth of premiums you can sell on a weekly basis will give you because if I could sell the 96 right now and get 56 cents or almost 60 cents, and I did that 4 times, that would be what, $240. Whereas if I hang on to a monthly, it would be less than that, because if we go out to the next month out, which would be December, and you can see right now it doesn't even have the 96 here, but the 97 is about $1.97. You're 42 days away, which equates to approximately what, 6+ weeks. Yeah, about 6+ weeks. And so do the math there to figure out what you want to do. Then what I would that's one. Step 1. Step 2, go down to your intraday hourly chart and start assessing and evaluating where would you want to sell your calls if you're only selling calls, and plan your strategy around that, where because if you sold an at-the-money call on, let's say, on the 28th, which was last Friday, you could have sold an at-the-money at 94 or $95, and you would have got a nice premium for that, dropped out, you could have bought it back. I do cover calls a little bit, probably a lot differently than other people, is I'm looking for trying to get my return fairly quickly so I can get out, because covered calls, the longer term covered calls, can tie up that position on you, especially if you get a real big run. And so I'm for collecting more premium more quickly. So I hope that helps a little bit. But I'd be looking here at the I would, one of the things you can use this hourly intraday chart is where not to sell the covered call. In other words, where looks like it's going to bounce. That would not be a place you'd want to sell your covered call. You can do that somewhat off the daily charts, or if you're longer term, you can even go to a 2-hour chart. Okay. Do we cover that? UCO. Oh, I like that. UCO is, what is UCO? Okay, crude oil, ultra. Yeah, Eric, I mean, we definitely see that it is at a strong level of support, and then it's backed up by this secondary level of support down here at 766. This sell-off has been fairly evident as it's dropped back down. There's another one as I just double check and see what kind of, yeah, you see it also has weekly options, and next week's weekly option, see this big hump in there's a good chance that it could pin right at about 10 bucks, which would put it right back partway up this channel here. I like this one. I'm going to add this to my list for the potential ETFs. So, okay, any last questions, guys and ladies? Okay, hey, have an absolutely awesome weekend. Again, if you're in the Bay Area and you can make it down to see Lee Tanner tomorrow at the Bay Area Moneymakers at the San Jose Masonic, that would be great. And until then, and if the concept and idea of more focus on leverage ETFs appeals to you, just drop me a note. If you're not a active trend trading premium member, I'll be glad to send you a link for the reduced membership going into next year, and that's a monthly membership, so you can cancel at any time. And yes, Barbara, we'll be online with the BAM tomorrow. The invitations will go out a little bit later today. So with that, I'm going to call it a day. Have an excellent, God bless everybody.